Good afternoon. Todd Engelhardt, Regional Director of Investments, Cumberland Advisors, standing in for Matt McAleer. It is Friday, May 31st. We're in the middle of the trading day, and I'm here with my colleague, Shaun Burgess, Fixed Income Portfolio Manager and Analyst. Trading over this week was just erratic, especially for the equity markets. The bond markets to a lesser degree. I mean, we started off the week, had a blip up Wednesday, Thursday. We're pretty much going to finish close to where we were at the start of the week. But these reactions to the inflation saga are just confounding. You know, I look back at CPI data, and you reach back 2 years and you look at the quarterly data. They publish a year-over-year number, and you see us moving from over 9% in the second quarter of 2022 down to just south of 4% right now. Granted, the CPI has moved a bit sideways since then, but you know, higher for longer might be frustrating, but it's not the worst thing in the world. I mean, what's your opinion on this?
No, it's not. The last couple inflation prints we've seen have really shown to be a little bit stickier than I think the market was anticipating, especially as you ended 2023. Remember, 6 rate cuts expected at that point. Now to a readjustment, the narrative which we talk about, so important in driving these markets, that higher for longer narrative, and that sticky inflation really kind of more so backing that narrative. And this week, you know, we saw a good deal of volatility in treasuries and equities, as you pointed out. You know, you went from a 440 all the way up to a 460 on the 10-year. Remember, that's the benchmark treasury that the market generally looks at. And you're going to finish the week somewhere around a 451 or so. So, you know, you're a little bit higher than where you started. And, you know, it's really just more sideways action. We talked about it last week, how the market's really looking for data. We got some this week, Thursday and Friday, as you pointed out. That was a little more bondholder friendly, caused a little bit of a lower yield, right? Drop in yield. So we'll see if that can continue into further economic releases. Remember, this Fed is going to be very data dependent. They've told us that. So as these economic releases come out, they're going to reinforce either that higher for longer narrative we've talked about, or, you know, cut sooner than later, which I mentioned on the last video. So we'll see how those releases, you know, those further releases kind of shape the narrative and push the market either towards slightly higher yields or maybe slightly lower yields. We're positioning toward a longer term outlook. You know, these short-term gyrations are important to keep an eye on, but we really have a longer-term outlook that we're positioning portfolios, and really that's driving our longer-term positioning of these portfolios. So, you know, we're really going to look to see how this data shapes up. Next week is for Munis. We've got reinvestment cash coming in. June 1st tends to be a big reinvestment period for us, so we're going to see how that shapes the municipal market. Munis, along with treasuries, all drifted sideways to slightly higher in yield, 5 to 10 basis points, as I said. But we'll see how that reinvestment, if we can get some lower yields in munis, if we can get some action there. So we're going to be keeping a careful eye on that. And, you know, we're always happy to share our thoughts with either current clients, future clients, hopefully, or anyone who's interested in how we're positioning portfolios, what we're thinking on the economy. So we encourage that. So if you're a client, you have questions, we're happy to have conversations.
Absolutely. Thank you. Not anything in the form of meaningful equity trades so far this week. We have mentioned repeatedly our interest in adding to positions that we already own on weakness. Industrials is one area that we're keeping our eye on. So I just wanted to make mention of that. That's pretty much all for this week. Matt will be back next week. Have a restful weekend.